If there's one word that you can use to describe the used car market, it's volatile. And when we're checking statistics here, we're looking at the latest from Cox Automotive as well as Manheim Index, which is a clear indication as to what's going on in the used wholesale market, wholesale auctions. And usually the auction market tells us what we're about to see here going down, and obviously seeing into the retail market shortly thereafter. There's a natural lagging effect where dealers are picking up a lot of their product for their sales on their lots, but they're grabbing them from the auction. And what we're starting to see is some surprising news. And a lot of you are probably wondering, are these new used car prices finally about to crash? Is this what's going on? What's the market doing right now? And can we anticipate some amazing deals on used car vehicles? Well, we want to take this back and I want to explain how we got to these numbers. First of all, with this update in the market, I want to break this down, talk about how the market has changed here for November, and which particular types of genres, cars, trucks, SUVs, electric vehicles, which ones were impacted the largest and which ones the least. So we want to break this down, but let's break this down from the beginning of time. We know everything was pretty typical. Natural depreciation rates on used vehicles we saw up to and including 2020. Then of course the bottom fell out and everything changed. We've never seen a market like that. There was a scramble to get shortage of product. People were overpaying, and of course now that drove all kinds of strange anomalies within the industry where people were overpaying market adjustment fees, 10, 12, 15K, often 25, 40% above sticker in some extreme cases of highly sought after vehicles. It's just a strange time. And of course, there was a shortage of inventory due to the shortage of chips, and naturally people were just willing to pay for it. They didn't want to wait. So that was clearly going on. And what we saw in 2020 to 2022 was really an anomaly and not typical for the market as a whole. Then we saw from that transition from low interest rates, because people were in fact buying a lot of cars because of low interest rates and government handouts and allowances, people were spending. But then as we rolled into the end of 22, we started to see the spike in interest rates. Things changed. But not only did it change in a way that it created less desire to go out and buy these vehicles, although there was a still strong demand for a lot of vehicles and people continued to buy, it seemed like a lot of the natural market, the fury, if you will, the piranhas eating that fresh piece of meat, it felt like a lot of that had settled out, although there was a steady chronic buying. And it didn't matter the fact that we saw higher inflationary rates, the fact that we saw increased bank rates and reserve rates. It didn't matter that those rates got bumped up in Canada, US. People continued to buy to a point. On the retail market, this was going up. But there were some markets where numbers went down. And we've got some numbers for sure where we see the lease numbers actually drop pretty dramatically. So in 22 to 23, we saw people taking out less leases. And what happens to a vehicle that's leased? Well, generally, somebody takes out a lease for 2 to 3 years. And then after that time, they either decide to buy it out, keep it, or in most cases, what happens, people just don't trust it, and that's why they're leasing it in the first place, either business write-offs and move into the next vehicle, or people just don't like to deal with expensive maintenance and repairs, so they don't want to put themselves at risk, so they just lease it, and then once the warranty's gone, they give it back as a lease and they move into the next vehicle. But from a business and commercial perspective, what was happening was a lot of people were not leasing as many vehicles. We've seen the lease numbers down dramatically because of the higher interest rates. It was less palatable to go out there and lease a new car. So we saw those numbers drop pretty dramatically in 22, 23. Now, traditionally what you would see on the back end after the 2 to 3 years, those vehicles would wind up back into the auction houses where dealers would start picking up a lot of those vehicles. Well, guess what? Lease rates are down in 22, 23. What does that mean? When these lease returns start coming back to the auctions, back to the market, there are less of them to pick from. So naturally, there's more of a buying frenzy again on the late model used vehicles. Hence, what we've seen here recently with, based on the Manheim Used Vehicle Index, we actually saw a strange anomaly here in November, where normally when you get to the end of the year, you anticipate some serious drops in prices. And we've seen some major incentives. As a matter of fact, I believe we're up to around 7.5% to 8% of every transaction is covered by incentives right now. That was pretty dramatic. It's actually breakthrough record numbers where a lot of these manufacturers are putting out serious incentives to get people to buy their products. But in doing so, you've got a twofold situation. We've got a lower number of lease returns coming back, so the quality late model vehicles that are available to buyers that are 2-3 years outside of, coming off of the end of these lease periods, there's less of them available. So the good quality vehicles are harder to find, and people again are in a position where if they're shopping for, say, an M340 BMW, there's not 8 of them in the city anymore. You might have 2 or 3 of them to pick from, and one's banged up and the other one's got a little higher miles. So now your picks are fewer and far between. We're also seeing a lot of the quality of the lease returns lower. We're seeing people, generally aren't taking care of their cars. Easy come, easy go with some of the money and the finances. And a lot of the vehicles that we're finding in the used car market are not that well looked after. We're seeing a lot more cars on the used segment as well. Junk, really, quite junk. A lot of them we've seen since what happened just down here in Texas and Florida here earlier in the year. Now a lot of those flood vehicles are making it to the market. Now what you're having is this market of fewer good quality late model lease returns, but you're flooded with literally flood vehicles, damaged, poorly looked after vehicles, and the overall quality of the used vehicles is dropping. You're seeing vehicles with scuffed rims, banged up front ends. They didn't bother putting PPF on it, so it's chipped up, it's rocked up. They're often just not that clean, and they're just not looked after, and a lot of them are higher miles. We're seeing a lot of these used car vehicles. The average mileage on a used car vehicle has drastically gone up. I mean, if you looked at 7 or 8 years ago, we saw mileage on late model used vehicles much lower. It's just, there was a better selection of higher quality vehicles, and now people are scrambling to get anything. And the only thing left is kind of the junky scraps. And so this is what's starting to happen. When the good stuff comes up, and as we pop out the other end of these leases, we're finding people are willing to pay a little bit more. Hence, what we've noticed based on Cox Automotive and some of their statistics, that contrary to what we would expect as we hit the year end here, we would expect both more aggressive deals on the new car segment, which we're seeing some of that, and primarily only because of incentives. But we're seeing something quite strange on the used car market. Actually, in November, we saw an uptick in sales and an uptick in the overall price, the average price of transaction of used cars, which is absolutely bizarre. This typically does not happen, and it was around to holiday season. We're usually finding and enjoying the opportunity to get out there and grab what's left at the end of the year and usually get a pretty good deal. But it seems as though with the lower inventory and the junk that's floating around out there, more people are inclined to pay more for the decent vehicles. And when we look at the price changes for selective market classes based on Manheim and Cox Automotive, and again, based on statistics, we just want to go by the numbers, not making it up any facts here. This is strictly, we look at the different types of genres. Now, one of the least impacted is the mid-size cars. 0.3% is what we saw, and actually it looks like it's on the upslide. So there was a very slight marginal increase in mid-size cars in terms of year-over-year percent change, okay, on the price change of these cars. So mid-size cars, slight upgrade, not enough to really worth mentioning, but it went up. SUVs, CUVs went down by 0.2%. Very marginal. I mean, again, almost negligible. But you can almost account for the fact that higher incentives on brand new start to put a little pressure down on the used vehicle market. So if you're looking at, something slightly used and you've been shopping in the used market, maybe a 2-year-old vehicle with 60,000 miles on it, and they're asking, $47,000, and you go look at a brand new one and it's 52 grand for a brand new one. Well, with the incentives, people are starting to make that decision and start to look at some of the other vehicles in that are incentivized brand new. It just makes more sense to a lot of people. Okay, so other areas, the luxury car segment is down 1.4%. That's a significant piece. And I mean, we know what's been going on in the luxury car segment. Let's face it, a lot of it is a lot of those manufacturers that are struggling. And a lot of it is because a lot of the luxury OEMs are creating a lot of these, what can I say, electric vehicles, hybrids, And this transition or transformation in that industry, and it feels like a lot of the luxury car manufacturers are going through this and they're feeling the pain. I mean, look at Audi and the e-trons and e-tron GTs. There's less of a desire to buy a lot of those vehicles. And that's both on new and even late model used. So we're seeing this slight downtick in the desirability of luxury car vehicles. And a lot of that is reflected in the simple fact that the economy is not thriving like it once was. There's some instability both in the Canadian and US side of the border. More so in Canada for sure, less people are buying because of the high taxation. Interest rates are still somewhat significant. And just the instability, we know the unemployment rates are still holding fairly high in Canada. US, they're slightly getting better. But there's all this instability in the market, and luxury cars are just that, they're luxury. So a lot of people make the selection and choice that, you know what, maybe I don't want that 3-year-old BMW, it's too risky. Why don't I go buy a brand new Honda instead? So what you're seeing is used luxury vehicles are starting to take a little bit of a hit here. Compact cars, surprisingly, a little bit of a hit as well. Also a similar number, 1.4% decline on the price year over year. In November of 2024. And a lot of that primarily is because, well, let's face it, there's less of them. There's too many incentives on midsize or in SUVs and CUVs, and people are getting more of the flavor. More people are gravitating to SUVs. We know this. We know the popularity of the market. More people are looking at those types of vehicles, and less people are inclined to buy those bare bones, run-of-the-mill, the Nissan Versas and Micras and all these types of little vehicles. Less and less people want that, but there's always a market for it, but it just seems like it's taken a bit of a dip in November. What we do see, however, here's an interesting one, and we'll get to pickup trucks here at the end, but I want to identify with a couple. Supercars, exotic cars, and we'll touch on trucks and EVs here shortly. But exotic cars, and I've been seeing a lot of the exotic car market has absolutely been tanking. I mean, we look at a lot of the OEMs, Lamborghini, they're just not selling. I mean, as great as a a lot of those supercars are, Aventadors are holding. But I've been watching some early, 2012 to 14 Aventadors. If you look 2-3 years ago, they peaked. They were absolutely trading huge money. But again, when people don't have the money, those are the first things to go. So I've been watching prices on those very closely. The V12 Aventadors and things like that are going down quite dramatically. We're seeing a lot of new models coming out brand new. Temerario for Lambo replaces the Huracan. Ferrari's dealing with the 296 as well as the SF90. And because those are both hybrids, they're taking a real beating in the used car segment. So what we're seeing is, between the McLarens, who've always seen heavy depreciation, where we've seen the Ferraris, typically not as much, but these new hybrids are really changing the trajectory of the used car segment here for Ferrari. And Lamborghini is just a slow decline. It's just a race to the bottom for these manufacturers. Seems to have less people interested in buying these high-end supercars. So we're seeing big drops in the numbers and the year-over-year percentage value of exotic cars overall. I mean, less people are interested in those, period, right now. It's basically back down to bare essentials rather than the nice-to-haves. So in that place, we're seeing electric vehicles, EVs. Would you believe this? 11.4% is the decline year over year price change. That is a huge impact, huge. But a lot of that, let's face it, we know the flood of the EV and the early adopters, and they were pushing these vehicles out. We had Tesla, highly incentivizing a lot of their products. The Tesla Model Y is the most popular, and then competing with the Mustang Mach-E was also competition. The Ford Mustang the F-150 Lightning by Ford, also highly incentivized because they weren't selling. Now we're on the back end of highly incentivized products as well as lease incentives. Now what we're seeing is a lot of these electric vehicles are popping out at the other end, but nobody wants those on the used car market, or very few people are selectively buying them. So it's really kicking the crap out of the EV market. And so if you're one of these buyers that you felt like you just want to get into one, that might be the time, pick up something slightly used. Tesla's been incentivizing slashing prices for the last number of months and years. So it's clearly a strong indication the EV market is suffering. Either you buy it new or you just don't buy it at all. And a lot of the used cars may not be subject to some of those cashbacks and the rebates that you're getting at the federal and state and provincial sort of levels. A lot of those are not there for the used car market, so a lot of people just go with brand new. It just feels like you're better supported buying it brand new. So in the used market, other than Hertz dumping their fleet where there were some opportunities there, see, that was another impact as to why these prices dropped. When you had rental fleets like that hitting the market in hundreds and thousands of units. Now all of a sudden that's taking a toll on the market, adding extra inventory, but giving you the ability to pick something up dirt cheap. But anyway, EVs, nothing new there. We know the early adopters, and they're moving into their next models. And not a lot of people are looking for used EVs. So last, certainly not least, what we're looking at is the pickup truck market. And we know what's been going on for some time, and truck market has been absolutely bananas. I show you time and time again. I've showed you Rams. I showed you the other day a Ford pickup truck that was $120,000. I showed you a GM, the HD Denali Ultimate, and that was $130,000. It doesn't take long. You look around, any of these pickup trucks are going for ludicrous money. With that said, the incentives are very strong right now, and I have a couple of people that I spoke to actually just yesterday about some strong incentives where they're almost giving these vehicles away. They're literally trying to move metal, and they're not able to sell the volume. So on one hand, they'll tell you they're selling like hotcakes, but on the other hand, when you're hearing what actually people are dealing with and going through when you're sitting down dealing with these salespeople and you're serious about it, on the front end you're not seeing it, but on the back end, when you really start sharpening your pencil, you'll quite often find that there are some big incentives on trucks. But what does that do on the used car segment for trucks? Well, if you're making that choice and you're looking at this 3-year-old pickup truck with 80,000 miles, and it's probably been kind of driven hard. It's got some chips on it. It's got some light corrosion on the frame, and it's got some wear and tear and some, trucks are built pretty heavy duty. But I mean, when you're looking at that, and you're looking at this used diesel truck for $82,000, and then you're a brand new one, base trim, you can even get, some of the, like say a tradesman 3,500, and you can possibly get into that for an extra 10 grand, maybe $12,000 more after the incentives. Then a lot of people are making that choice. So you see, again, trucks, there's a lot of that downward pressure from the truck market. And we're seeing it all over the place. Rams are slashing prices, even though they've eliminated their entry-level pickup truck. Their classic 1500 is going away. There were a lot of incentives there that will be going away soon, but they're starting to incentivize the new ones, the 25s with that turbo straight 6. They're also GM's incentivizing a lot of their half-ton generic, a lot of their mid-level mid-trim level vehicles, and you're just seeing it all over. Ford somewhat incentivizing some of their F-150s. But the bottom line is, with all these strong incentives we've been watching in the truck market, it's pushing down on the late model used. And so, you are starting to see that reflection here in the truck market. And it shows because trucks are actually down in November by 2.3%. Now, that's not a massive amount, but it's enough to tell you that there's something going on there. I mean, we haven't typically seen this. Trucks have been very popular and they're highly priced. And normally people would generally buy more slightly used trucks than they would brand new. But because all these heavy incentives on the last quarter here of 2024, it just seems that more and more people are taking up on the incentives rather than buying a late model truck. Now, you could do that, or you could do what, like a lot of other viewers are doing, or like I've done. And, I've got my 22-year-old Ram, and a lot of people, hey, it's a truck. From the steering wheel perspective, it feels every bit as good as any of the new trucks. A little less power, a little less economical, but it still kind of does the ssame thing. So a lot of people are either dropping a new engine in their old truck, polishing it up, doing a little, overhaul, and they're good to go. But, late model trucks, they're still going for a premium. And because of that, less and less people are looking at buying them. Hence, prices are starting to drop with the big incentives on the new car segment. So what we're seeing is an overall uptick in November. We're seeing these car and truck and SUV prices continue to climb. And for this foreseeable future, it looks to continue doing that. Now, with that said, as we roll into the end of 24 here, more and more incentives, more opportunities to get good deals on new vehicles. If you stand your ground and you're not willing to bend over and take it like a champ, you can probably get some great deals on some brand new vehicles. And with that, that eventually will have a lagging effect and may start to bear down slightly on the used car market even further. Now, I don't expect that lag effect to kick into maybe the first quarter of 25. But also, as I've said, we're seeing the OEMs start to creep up a lot of their MSRPs. And, you know, in all of their infinite wisdom, and we saw the vehicles were not selling here in 24. They had to be incentivized. But yet, we're seeing vendors like Jeep, Stellantis, Ram still creeping their prices up. They're actually increased their price of their new Wrangler for 25. Yes, they've actually crept it up a bit. They haven't learned that they're not selling. They haven't learned from the punishment they took this year. It's absolutely bizarre. But overall, I would say short term, it looks to be that we continue to see this upward trending for used car vehicles, late model used car vehicles, and the prices continue to trend upwards. We don't see a lot of lease returns, not a major influx anyhow, to help assist with over amounts of inventory. Rather, shortage of inventory means prices are going to stay strong. Dealers are going to remain firm on selling a lot of their used car inventory, particularly the quality ones that aren't beat up. And you still got to go in there. You've still got to fight a good fight. You got to still do your best, shop around, look for the best deals, play dealers against each other, and certainly do your best to negotiate. But the bottom line is, you know, the wholesale prices based on Manheim show and indicate that we're seeing this uptick again, and the trend looks to be continued upward pressure on the used car market. Anyway, with all of that said, if you want to learn what some people are doing right there, I've been doing this, driving my old rig for some time now, and that's what a lot of buyers are doing. You want to check out that video. I explain the whole concept. Anyway, hope to see each and every one of you in the next one. See you real soon. Bye-bye.